So good morning, everyone. My name is James Walsh. I'm Head of Membership Engagement here at the PLSA, and it's a pleasure to welcome you to this webinar, this Policy Insights webinar on using engagement seasons and helping your members with their at-retirement decisions. I'm joined this morning by two of my colleagues, John Echevarria, who's our Senior Policy Advisor. Morning to you, John. Nice to see you. And also Joe Dabrowski, who is our Deputy Director for Policy. And morning to you, Joe. John has recently joined us from Australia, where he held a range of pension policy roles. He worked for our opposite numbers down under ASFA, which is the Association of Superannuation Funds for Australia. I think I've got that right, John. We're looking forward to hearing a little bit about his experience down there and the differences he sees with the UK pensions market. And John's specifically working for us on engagement season, so he's going to talk about that this morning. Joe oversees much of our policy work in his Deputy Director role, and he's heavily involved in all the topics that we're going to cover today. So the plan for this morning is I'm going to get Joe and John to give us their assessment of the state of play in terms of pension schemes engagement with their members. You know, what's the problem that we're trying to address here? Then John is going to talk to us about engagement seasons, tell us what those are all about. I'll have some questions for him. I hope you will have questions. We'll try and dot your questions from the audience in throughout this webinar. So don't hold back. If you've got a question, put it in the questions tab or a comment in the chat. I'll be looking at those. After John, we'll get Joe to talk to us about what the work that we're doing at the PLSA on DC decumulation, and we'll have a bit of quick Q&A with Joe, and then hopefully time for some more questions at the end. So we'll make this very interactive. We're going to finish at 11:45, and before anyone asks, we will send the slides and the recording round to you on Monday next week. So let's kick off with assessing what is the situation in terms of pension schemes engagement with our members today. Joe, how would you assess the state of play and the problem that we're trying to tackle?
Thanks, James, and good morning, everybody. I hope we can bring you a little bit of tranquility in this turbulent time. So I think it's a really good and it's a really big question, James. When we talk to members about engagement, there's quite a range of views. From we need to engage a lot more with members in order to make sure that people, understand their pensions, understand finances, can make good decisions, versus a little bit more. Actually, we just need to make sure that the product comes out at the other end and it's a good outcome for members. So there's a range of philosophical approaches, but largely, if we look at the state of pensions engagement, it's not great. We know that people generally have, in the population have kind of poor financial literacy, and also they kind of struggle to engage with their pensions, which creates all sorts of engagement issues. So, just look at some of the stats here that, lots of people don't know about their pensions. They struggle to find the information. A lot of people don't know how much they need to save for retirement. It's not a unique problem to the UK, but it is a problem, and a problem that we probably need to overcome, especially as we move into a world which is sort of much more DC oriented in terms of where majority of savers are, as more DC savers also come to retirement and have to make different choices to those that may have gone before that had primarily only DB provision, where you had a lot of certainty, you had a lot of guarantee, you had fewer choices to make. So engagement needs to change. Dashboard will also be a driver for that, and lots of opportunities there too. But engagement, is still a bit of a problem child for us kind of across the piece, I'd say.
Yeah, I very much agree with that, Joe. I mean, do you think things are improving though? Are you a sort of glass half full sort of person?
Yeah, I think I'm always a glass half full kind of person, James. I think it has improved a lot. We think about lots of different things that schemes are doing and kind of evidence that we hear from funds. People have got lots of kind of online content, online portals. People are putting extra attention into, using different means to engage people, whether that's kind of through videos, whether it's through other forms of engagement. And also, on some of those other big issues like stewardship and responsible investment, using some of the kind of fintech apps that are out there in the system now, which allow kind of members to have a look at what you're doing, and also to express a view on the kind of expectation around where the scheme might wish to vote at a kind of corporate AGM, for example. And also, they provide a feedback loop for funds back to members to say, we've done this, look at what we've done. So I think, big steps, we look at lots of members saying very high kind of engagement now with some of those online portals, etc. So, progress is all great, but still probably a bit more to come, and especially if we all need to be kind of ready and kind of active with the dashboard, and it doesn't become sort of an expensive tool that nobody uses.
Okay, thanks, Joe. And we'll be coming back to you a bit later to hear more detail, particularly about the at retirement DC decumulation challenge. And my colleagues have put some documents on that actually in the chat, so have a look at those. They summarise the PLSA's own work we've been doing in that area, some policy proposals we've put forward for a new framework on DC decumulation. So that's all in the chat for you. And if you do put questions in the Q&A box at any time. But John, let's bring you in. As I said, you've joined us from Australia, different pensions market, of course. Is anything sort of surprised you about what you found in the UK, particularly on the engagement front, or differences you've seen?
Not really, unfortunately. I think, as the slide sort of says there, the problem's not unique to the UK. When it comes to pensions engagement, unfortunately, the story, certainly in Australia, is pretty much very similar. There's very low levels of engagement by scheme members with their pensions. It's just not seen as an exciting topic, and a lot of people say they find it confusing. Now, it's slightly different in Australia because it's a compulsory system over there. So for everyone that works, the employer has to contribute 9.5%, 10% into their pension. So even though just about everyone in employment has a pension in Australia, engagement levels remain stubbornly low, particularly among younger people. Obviously, those that are closer to retirement, sort of 55 onwards, they obviously tend to be a bit more engaged. But overall, I think it's something like 80% of people who are enrolled into a pension scheme in Australia end up in the default investment option, simply because they're not engaged enough to exercise choice. I guess the one thing I will say is that because they've had compulsory contributions over there for about 30 years now, the pot sizes in Australia tend to be much larger on average, particularly for those approaching retirement. And as pot sizes continue to increase, people do start to pay more attention to their pension. So that's, I think, encouraging for the UK. I think we'll see more people slowly start to get more engaged with their pensions over time as the system matures and pot sizes increase. But having said that, that could be decades away, and really need to start doing more now to get people to engage more with their pensions and to start planning for their retirement.
Okay, John. So I think we can put you down as sort of glass half full. As well. But I mean, obviously, as you say, there's a challenge there in Australia, just like here. Are there particular things the government or the industry down under are trying to do we could perhaps learn from?
Yeah, well, because people are disengaged and, as I said, defaulting into the default option, there's a lot of focus that the Australian government has placed on making sure the trustees sort of tighten that default option so that there's sort of fewer bells and whistles, but making sure that fees are low, investment returns are high, and that's sort of, I guess, protecting people from themselves, really. If they're not going to be engaged enough to choose that, then the government is saying, okay, well, we're going to make sure that schemes over there protect them by making sure that the default option is as good as it can be.
Okay, thanks, John. That's great. Okay, so we're going to look in a bit more detail at this proposal of this concept of engagement seasons. And John, you're doing a lot of our work on that. So over to you. Talk us through it.
Thank you. Thanks, James. So pensions engagement season, it's an industry-led campaign, and it's being run jointly by the PLSA and the ABI, and it's designed to boost people's understanding and engagement with their pensions. It's a multi-year campaign, so it'll run for at least 3 years during the autumn and winter of this year, next year, and 2024. And for those of you that aren't aware of the history of how engagement seasons came about, it actually came about from the idea of the minister, should probably say the former minister now, since he resigned this morning, but the idea that Guy Opperman had for a statement season, which he floated with industry last year. So this is the idea where every scheme member would be sent a paper statement at around the same time every year, around the time of Pension Awareness Week in September, in the hopes that that would somehow suddenly improve member engagement. Now, needless to say, there was significant pushback from the industry, mainly from a cost perspective, but also there was strong consensus views from our members that there are other better, more cost-effective ways to improve member engagement. So we put a proposal to the Minister for the industry to develop and launch a multi-year engagement season campaign as an alternative to the statement season idea. And thankfully, the Minister agreed to set aside the statement season idea and back our proposal instead. So that's how engagement season came about. And as I said, it will run for at least 3 years. The first phase will launch in September, just before Pension Awareness Week, and run through to November this year. The objectives of the first phase of the campaign are fairly modest, and deliberately so. The aim for this year is really just to basically help people reconnect with their pensions. So to identify who their pension providers are, make sure their contact details and their beneficiaries are up to date, check how much they currently have in their pensions accounts. So pretty simple stuff. But there will be larger campaigns developed in years 2 and 3, which will run in the autumn and winter of next year and 2024. So if we go to the next slide, yeah. So this is just an illustration of what the 3-year campaign could potentially look like. I should point out that years 2 and 3 aren't set in stone by any means. At this stage, we're really just focusing on the first year's campaign. But the intention is that years 2 and 3 will build on the messaging of the first year. So for example, in years 2 and 3, the campaign could potentially assist savers to log on to pensions dashboards, which Joe mentioned earlier, check their state pension and their workplace pensions, find out how their money is being invested, help them work out whether they're on track, and if not, to consider what action they should take, and find out how many pots they have, and hopefully to take steps to consolidate any small pots. So if we go to the next slide. Yeah, so at this stage, there are currently 17 providers and schemes representing over 41 million savers and customers that have agreed to officially sponsor or support the Engagement Seasons campaign. And these sponsors are collectively investing about £2 million in total to develop and deliver the campaign over the next 3 years. Now, I know that just about every pension scheme out there has been looking at ways to improve the level of engagement with their members, and obviously we need that to continue. But I think it's safe to say that this is really the first time that so many pension schemes and providers across the UK, including some of the very largest, have united behind the same call to action over the same period. So we're really excited and hopeful that the Engagement Seasons campaign will reach tens of millions of savers over the next 3 years, and slowly start to move the needle when it comes to getting people more engaged with their pensions. Now, on the next slide. Yeah, so in terms of the governance of the project, there's a steering group that's been established that's made up of the nominated reps from each of the campaign sponsors, and their role is really to set the strategic direction of the whole project and ultimately ensure that the campaign is delivered over the next 3 years. So they're the ultimate decision makers on engagement seasons. In terms of the more interesting stuff, the sort of the output of the campaign, we're in the process of appointing a professional creative agency to help us develop the campaign. So there's going to be distinct branding associated with the campaign, with an exciting new logo and slogan that'll appear on all the campaign collateral. I don't want to preempt what the creative agency might come up with, but it could be things like a simple social media campaign, targeted advertising. So you could potentially see billboards about pensions in your area. A lot of media activity to promote the campaign, not just through trade press, but hopefully some national coverage as well. And then webinars, fact sheets, and other white labeled collateral that'll be freely available to everyone, for everyone to use, not just the organizations that are sponsoring or supporting the campaign. There's also going to be a big wow event when the campaign launches. That's still to be worked out, and we may have a celebrity endorsing the campaign that people will recognize. I can't say who it is at this stage, mainly because it's still being decided. So I actually don't know who it is yet. But basically, there's going to be lots of buzz about pensions when the campaign launches and hopefully throughout the season. What else? We've also entered into an agreement with Pension Geeks, who are the creators of Pension Awareness Week, around some combined activity in September during Pension Awareness Week. So during that week, they'll be running a series of around 15 live webinars and live Q&As, which some of the steering group of engagement seasons will be involved in. And so people will be able to log on and book themselves onto those live webinars during Pension Awareness Week. I guess the only other thing I really want to mention is that we have been currently working with the minister / ex-minister's private office to organise a parliamentary reception in October to support the launch of engagement seasons. That's probably a bit up in the air at the moment, with the minister resigning this morning. But I suppose we can't rule out the possibility that he'll be reappointed to the role in a few weeks. There's also going to be other events and activities, obviously, throughout the season that we're trying to get either Guy Opperman or the minister, whoever it is, to attend and be involved in. And that will hopefully include the PLSA annual conference in October. So that is just a very quick summary of what's happening on engagement season. There's lots of moving parts to the campaign. It's all very exciting. You'll definitely see and hear more once the campaign officially launches. So yeah, watch this space.
Great. Thanks, John. That's all really interesting. And as you say, there's a degree of uncertainty about the minister's involvement. But anyway, perhaps I could just bring Joe back in now, because I know, Joe, you're sort of co-chairing the steering group. You've been liaising with Whitehall extensively on this. This is a big sort of set-piece campaign. It's going to involve a big effort from the industry, from our own members, but also from government as well. Do you think there's any likelihood that the sort of level of commitment from the government side might change if we get a change of minister, or is that sort of pretty well set in stone, do you think, Joe?
Wow, that's a big question, James. I mean, I think we do know that engagement is again a big passion of the former minister, and who knows where things might end up next. But by and large, we look at the kind of trends that the department is trying to kind of nudge and push along. A lot of that content is engaging members, telling members what schemes are doing, making sure that members feel kind of confident in their pensions. That kind of element is there. So we'd hope there wouldn't be a significant kind of drop off in that kind of focus. Clearly, depending on what happens, that getting up to speed might be kind of priority number one, depending on who comes in. But by and large, this is an industry-led campaign too. We need to make sure that kind of this happens from a kind of industry's perspective. It's in all our interests to make sure that kind of people are kind of wake up to their pensions entitlement. And when we think about this kind of in the lead into dashboards, over the next year or two, and clearly some of that timetable might also be subject to movement now. But if we think about that there is a need to kind of make sure that people are doing some of those kind of basic elements more completely, more well, and kind of we are also being able to kind of tell people where to kind of come and find out what they've got. It's important that people understand that. One of the other big pieces of work that we're doing at the moment is looking at member adequacy, and we'll be publishing some more work on that in the autumn. But it's clear that there are quite a lot of people who need to engage as soon as they can in order to think about their retirement planning and the outcomes that they might want to achieve, because accepting all the other factors, including the kind of cost of living crisis, people will need to think ahead. They'll need to work out what to do with their pensions, because otherwise there'll be a lot of disappointed people in 10 or 20 or 30 years. And so, we start now. We're keen to have that support from government. We know the regulatory bodies like MAPS are also kind of keen to support and lean into the campaign too. So I don't see any of that changing. So really hopeful.
That's great. Thanks. So, John, we got some questions starting to come in from the audience, which is great. Just before we come to those, John, I want to ask you, and this is what some people are starting to ask in the chat, how can our members get involved in the campaign?
Good question. Yeah, I actually do have a slide on this. I was hopeful that people would be excited and want to know, how to get involved. So I've prepared a slide. So this year, really, we're keen for as many organizations as possible to help amplify the core messages and materials once they've been developed. It would be really great if schemes and providers could incorporate the campaign materials into their own communications when the time comes. So, if anyone would like to receive more information about the campaign activity and the shareable assets once they're developed, please send us through your contact details and I can add you to the distribution list. Also, if schemes are hosting an event during the season or maybe releasing a research report that's in any way sort of tied into member engagement, we'd love to hear about it. You could maybe think about whether you could include the campaign somehow in your own event or in your communications. The other thing is that although the sponsors and the supporters for this year are finalized, in years 2 and 3, there'll be opportunity for other schemes and providers to become official sponsors and supporters if they want to. And so we definitely welcome all interest.
Great, thanks, John. So Alex Kitching from Vodafone is asking, how far in advance of the launch date will the details and collateral be shared with the industry? Alex and her colleagues would like to start promoting Pension Awareness Week towards the end of August. Will the information be available by then? Yes.
Good question, Joe. I'm not sure if you want to come in terms of timing.
Yeah, I can come in. So we're working incredibly as fast as we possibly can to get the collateral ready and to get it out to people. I think about that window, Phil, we'll try and share as much as early as possible. Certainly whether that's simple stuff like the some of the kind of content stuff that might be coming for the geeks, the Pensions Awareness Days, the logo content, general intentions around kind of timetables, and that kind of asset toolkit. I would hope we would have it ready for that kind of window in order to kind of share it with people. We've been kind of we kind of agree things with the switch to engagement seasons in the spring. So there's been a fairly short timetable for us to kind of try and do a lot, and we're keen to give people as much time as physically possible because we kind of recognise some of those kind of practical constraints. So around that window should be right, and we're going to try and get everything as quickly as we can to everybody so that they can use it. So we really want everybody to kind of amplify the messages across schemes, across the industry, and more widely. And and it's a kind of quid pro quo. We'll try and do that for your stuff too. If you're doing stuff that kind of works in this, we want everybody to be in November when people think, God, I don't want to hear about pensions anymore. I've heard about this like 50 times this week alone. And just that saturation. We really want that kind of saturation effect.
Great. And presumably, John, Joe, if Alex or other colleagues want a bit more follow-up, they should just contact you in the usual way.
Yeah, absolutely.
We've got another question. Great. We've got another question come in. How will the campaign align with Talk Money Week, which is in November? Is there a risk that messages will be diluted if schemes choose to focus on, one thing over another, engagement seasons over Talk Money Week? How do they align?
So we're talking to MAPS, and MAPS are part of our steering group collaboration. So we're looking to align messages, and we kind of know what they're focusing on, and we're making sure that we kind of dovetail to avoid any missteps, and also to make sure that we're kind of supporting each other to engage people, across those financial issues through the period. There will be elements of the things that we think about at specific times which reflects, the current circumstances too. So we'll be looking at things to kind of help people with, risk elements as well as kind of wake up elements during the campaign. So things like kind of, the potential challenge around pension scams in the autumn when people are potentially feeling more pressed by the personal finances coming under pressure.
Great, thanks. Just a couple more questions. So Anne Hills from Somerset Pension Fund is asking, should our pension administration's teams expect a spike in queries? John, view on that?
Yeah. We hope so. The intention is that there will be a spike. Otherwise, we're not really getting the activity that we want, which is we want people to engage more with their pensions. And hopefully they'll register to log on to some, to the online, their online pension account. So we're hoping that that will be sort of the main driver or the main sort of action that people take. But yes, I think we are expecting and hoping that there will be a spike, a measured spike, and hopefully it's not just in a 1 week period. It might be hopefully spread, throughout the whole season and beyond. But yeah, certainly the idea is to get more people to engage, and therefore to, that there could be some extra sort of activity at the administration end.
So you talked there, John, about a measured spike. I don't know if you meant measured like modest or measured. We know what the size of a spike, but it's an interesting question. How will we assess what success looks like? Are there sort of benchmarks we're setting for this?
Yeah, so that's a good question. Obviously, it's one thing to develop the campaign and run the campaign, but you want to sort of see how it's actually gone. Otherwise, you sort of don't know whether you've been successful or not. So in addition to devising the campaign itself, the creative agency that we're appointing will be sort of proposing some key metrics to measure the success of the campaign, which the steering group will obviously have a look at and have to approve. And that said, the steering group has already been sort of thinking about this and discussing potential metrics that could be used to measure the campaign success. And obviously it has to use data that's readily available to schemes and providers. So it could be things like, whether schemes have seen a reduction in the number of lost members throughout the season, or maybe, pre-season and then post-season, whether there's been an increase in the number of customers registering for online access to their pension account, whether there's been an increase in the number of customers actually logging on to their account, that sort of thing. We've also had sort of some discussions with DWP regarding some of the metrics that they use to measure the success of their own campaigns that we might be able to use as well.
So that's engagement seasons. We'll have time for a few more questions on that later, but let's move on now to talk about another important aspect of engaging with members, which is helping with their decisions at retirement or decumulation. Joe, you've been doing a lot of work on this. Do you want to give us an overview?
Yeah, so this is an area that we've been looking at and thinking about for quite a long time. Probably three or 4 years now. And I guess just talking about the kind of genesis of that, one of the things we've been thinking about is what happens kind of at the retirement market, given some of the changes in the kind of structure and shape of savings in the UK, kind of as we have, big changes like kind of freedom and choice, which kind of mean that people are having to take more active decisions at retirement. The move away from largely the move away from an annuity model, the change in the kind of dynamics of people saving within mass trust, and also some of those challenges that people find around the kind of advice guidance boundary in terms of what support can be offered and what kind of trips into advice, and kind of where do you draw the line and what happens. We know largely that people do not have the support that they kind of need at retirement for some of those choices. We had quite a lot of a period where people were making, the lot of work from the FCA kind of retirement outcomes review demonstrated that people were making bad choices or ill-informed choices. There was clearly been a lot of attention paid to some of the risks around scams and the reported volumes of that, as well as the kind of probably the stuff under the surface that people don't see. And then we saw the kind of introduction of the investment pathways in the kind of DC sector, contract-based DC sector. And those have worked to some extent, but they have largely been about preventing harm rather than kind of ensuring that people get fully kind of joined up retirement outcomes. So following, I think, about 18 months of work with members and then a call for evidence, we developed our guided retirement income choices framework. And this is very much kind of largely about ensuring that when people come in the trust-based sector and kind of across the sector, actually in DC, this is sort of more universal approach, that when people come to retirement, they have that support in order to think about what do they do in the kind of decumulation phase. And so we look at this in the way that we want a requirement on schemes to support members, kind of legislative requirement on schemes to support members kind of at retirement. But we recognise as well that that isn't necessarily something that people can universally do across all schemes and of all shapes and sizes. So what we would be looking for is for people to be either able to kind of provide this support and service and accumulation options in terms of kind of blended products, or to be able to kind of signpost people to an appropriate place where they could go and get this provision. That might mean moving from a small DC scheme to contract-based or a master trust in order to kind of get this blended product that would offer people kind of that solution that they need, that kind of combination of flexibility and then kind of certainty. And that kind of encompasses lots of different things. Encompasses some of people's kind of wants for, lump sums, different kind of behaviors or options that people might want to take during their kind of life cycle in retirement. So, in kind of very early days of retirement, people might want to, be more active, have a bit more flexibility in order to travel, to do stuff with family, house renovations, etc. But then as people become older, they may need more certainty, and also to counteract some of the risks around kind of cognitive decline. A blended product might move you into kind of an annuity at that framework. So this is our guided retirement income choices framework, which we'll be talking to DWP about, talking to the industry about for a very long time. I'm kind of hopeful this might form the basis of where we move forward kind of as a framework for what happens in decumulation. And clearly there are other things kind of moving parts now kind of happening in the space, like prospect of CDC playing some part in decumulation too. So if we move to the next slide, there's a link in the chat function, but we very recently carried out some market research to kind of understand what is happening out there, what kind of provision is being developed. We spoke to a number of the very largest providers and master trusts, contract, and some of the GPP providers also, just to understand what's going on. And it seems that there's been quite a lot of developments over the last 18 months, really, that people are really beginning to think about kind of a decumulation offering. If you have a look at the report, there are some examples of some of the products that are being developed by some of the different providers and kind of the shape and the rationale for those. A lot of them feel like a lot of them are sort of currently being developed for kind of internal customer use, so they're not immediately kind of open market solutions, but there is a strong expectation that once people have established and run them for probably tens or hundreds of thousands of people that might have as kind of internal customers already, those will kind of be rolled out market wide. So we're seeing quite a lot of progress in this space, and we're really expecting to see that kind of kick on, because there is a growing population of people who are coming up to kind of retire with purely DC, and will be making these choices. And I think the other thing that we're kind of looking at is, where does this fit into some kind of broader elements around that debate about at retirement offerings. And we know that in other places like Australia too, this is a problem that people have faced, and it's important that kind of we settle on it and we build a framework that's robust and secure, and members get used to it before we get to the point where actually people are just kind of tipping into retirement and it just doesn't work for people. We know the investment pathways review indicates it's kind of working up until a point, but it's not really working as fully as it could. And if we move to the next slide, please. So we've been having a lot of those conversations with DWP about what we think needs to happen in the decumulation space. And DWP has relatively recently launched a call for evidence, looking at many of the kind of items and areas that we kind of identified previously, and seeking input from the industry on kind of what should the shape of this look like. So I think, we're pleased that DWP have kind of now moved into the space of thinking, actually, we need something in the trust-based sector. They also recognise that the trust-based sector needs a different solution than the solution that operates in the contract-based world, recognizing the kind of different setups, different regulatory levers, different motivations, different outcomes, but also the fact that there should be some synergy. So if you're a member, you're not necessarily thinking, when I come to retirement, am I in a DC or a sort of contract or a trust-based scheme? You just want to know, well, what kind of, do I get a good outcome? What kind of product can I get? How does this work for me? So we need to try and make sure this kind of knits together pretty neatly. So the call for evidence is open for a couple more weeks. It was very pleasing. Maybe one of his last acts, public acts, the minister appeared at the Work and Pension Select Committee yesterday morning giving evidence. And he indicated that he was enthusiastic, at least at the kind of in the principle of having a trust-based solution, and also a trust-based solution that kind of matched quite closely in the way he described it to the kind of GRIC principles, that there would be kind of an obligation essentially on funds to put something in place so that when people come to retire, they can get some good products and good choices, and that support is there. We think it's really important to kind of knit together this solution in order to avoid some of those many gaps that exist in the current framework. I'm very conscious of our time, so that's a very kind of quick overview. So happy to take any questions, and I would encourage everybody also to reply to the call for evidence. It may be some time now before DWP respond, given events, but it'd be good to get your input into it.
Thanks, Joe. And I was going to ask you, what sort of traction we're getting for all this in Whitehall, but I think you've answered that. It sounds like quite good from the minister, and we don't know what's happening there, but also from the officials, civil servants who are so key to all this as well. So that's I think, quite encouraging. Can I ask you, Joe, about smaller schemes? Not all our members are big pension schemes with significant staffs. Is we're proposing a new duty on pension schemes here. Is that going to be manageable for smaller schemes?
It's a good question, James. It's one of the reasons why we think the signposting element is appropriate. So, and also partly why you need a legislative framework, because it means that if you're signposting, you can kind of include the kind of obligation to kind of point people at good products, but you can also ensure that the products that people are then offering and providing are comparable, robust, and have good standards to it. So you kind of remove that risk, and clearly, if you're a smaller scheme, being able to say, actually, we've had a look at the market. We think, there are 2 or 3 providers out here who might do the kinds of things that work for our members when they come to retirement. We recommend you go and have a look at this. That also closes some of that gap that we know that happens now. So most people come to retirement and they don't take advice. Even people with pretty large sums comparatively, FCA data kind of indicates that people don't take advice. They just don't want to take advice. They don't want to pay somebody for whatever reason to get a little bit of advice. When it feels like that's expensive, it can be £5,000, £10,000. That feels a lot to most people in order to get some advice on choices. So making this a little bit more seamless and automatic, really, really should help people, because we know that people struggle with these decisions.
Thanks, Joe. That's great. And Anne Hills has fired in another question. She says, will this at retirement guide include commutation for those in DB schemes?
That's a good question. I might have to come back to Anne.
Maybe
I can't remember when we've looked at the decumulation. I haven't thought of the DB elements of it for a while. So.
We'll give that one a bit of thought and get back to Anne on that. And incidentally, for everyone, if there's any unanswered questions, we'll answer them in the next few days and circulate the answers. So we've got a few more minutes for another 5 minutes or so for any more questions. So do put them in the Q&A box. We've got one we've not addressed yet from an anonymous attendee. That's the way the system seems to be working in this case, who says, I worry that the term engagement is used in a rather nebulous way. Will the sponsors and supporters be reporting their levels of member online registration, the number of members investing outside the default, etc., before and after the engagement seasons campaign so that comparisons can be made. So this is really about the engagement seasons campaign and measuring progress in a hard and fast way. John, have you got a comment on that?
Yeah, I mean, I don't think they'll be reporting necessarily on a formal basis, but certainly on an anonymized basis, they'll be reporting to us in terms of how, the experience that they've had, to see whether they've had sort of improvements in engagement, and whether they've had fewer people lost and more people logging on. And then we sort of will provide data on a more holistic level for the whole campaign. But yeah, it's certainly a very interesting question.
Okay, thank you.
James, if I could come in, I think it's probably worth saying that once the campaign is also finished, one of the things that, this year's campaign is finished, one of the things that we will be doing is looking at what has worked, what hasn't worked, in order to share learnings with the remainder of the industry, in order to say that people can, pick up for future and kind of keep improving. That's the intention.
Okay, that's great. And how does all this dovetail with the work we've been doing for the last 3 or 4 years on retirement living standards? We put a lot of effort into those. A lot of our members are now using them on the scheme websites, in the literature. They send out to their members to help them understand what kind of income they might need in retirement, what kind of saving they need to do to get it. How does all that fit into engagement seasons?
Well, that's a good question. I mean, retirement living standards is a fantastic tool, as you talked about. It helps people to get a good picture of what kind of lifestyle they might have in retirement. And it does get a lot of media coverage every time, the issue of pensions adequacy is raised. The retirement living standards get a mention. And as you said, a lot of schemes are using it and referring to it in their member communications, which is fantastic. So I'm envisaging that sort of, like the schemes themselves, the engagement season campaign will refer to the retirement living standards and other useful tools, like Money Helper and other retirement calculators and so on. So the campaign website will act as a signpost to all these helpful resources. Okay, great. Well, I think we're coming towards the end. I've just got a minute or two left. I'm going to ask you both, gents, perhaps Joe first. How on a sort of scale of 1 to 10, with 10 being very optimistic and 1 very pessimistic, how hopeful are you that we can make a real difference to people's understanding and engagement of their pensions with the plans you've been setting out between the two of you this morning?
Thanks, James. I think over the period, I'm kind of much more up at the 3-year period. I'm much more up at the kind of 8, 9, 10 kind of area. But I think we need to recognise that this isn't an overnight solution. This is something that we're going to kind of have to plug away at. We know this autumn people are going to have lots of other things kind of to focus on in terms of their finances too. But we need to start, and then we need to kind of make sure that we can be splashy, be noisy this autumn, engage people and build from there. We've got the dashboard coming too. That will be a really important tool for helping to engage people, get people to kind of look at their pensions on their phone if they haven't got their funds app already, etc. And so this is a starting point. It's not the end point. So we're not going to solve the 100-year problem with pensions engagement in 3 months, but we're gonna get a start, and I'm confident that we'll get a good start. Okay, good. And John, apologies to you. I'm not going to ask you the numbers out of 10 question, because we've got a last-minute question come in again from Alex Kitching about retirement living standards again. Will these be reviewed given the current high inflation environment? She says she imagines that must have some impact on the numbers currently in it. Joe, that might perhaps be one for you to quickly comment on. Yes, we are reviewing the standards in line with inflation, so we'll be updating that in the autumn. So watch out for that. Okay, so Alex, you can watch this space. Well, we're pretty much at time. So Joe, John, thanks very much for your contributions this morning. Great material and lots of positivity about how we can help members engage with their pensions. So that's fantastic. Thanks also to my colleagues Naomi and Jim, who are pressing the buttons and getting it all working behind the scenes. Much appreciated. And thanks everyone for dialing in this morning. We had a good level of attendance, so that's been fantastic. We will circulate some material on Monday. It'll be the slides and the recording. Perhaps we'll also put in the links to the documents we had in the chat, because I think one
at least one person was struggling to just click into those. Do complete our feedback form in the usual way. Thanks very much indeed, and enjoy the rest of your day.